Hi, folks. A very good evening to all of you guys. And I'm Harsha from Mudrex, and I would want to welcome all of you, to our exclusive webinar on crypto tax implications and investment planning, empowered with and in collaboration with KoinX. So just to give a brief introduction of our company, Mudrex is a crypto index investing platform backed by Y Combinator and Nexus VC. We democratize access to the crypto market and make seamless investment products. Our goal is to spread awareness and debunk common myths about cryptocurrency. And joining us today is CA Sonu Jain, a chartered accountant and a crypto tax expert with over 3 years of experience in the crypto tax space. He has helped numerous Indian and foreign-based crypto investors, startups, and businesses with crypto tax advisory, tax structuring, and tax filing services. CA Sonu Jain has also made significant contributions to the education of the Indian crypto community. Through his educational videos and various partnerships, he has educated and empowered more than 50,000 Indian crypto investors on crypto taxes and crypto TDS. Currently, CA Sonu Jain is providing his expertise and guidance through his association with KoinX, which is an online platform for crypto exchanges and tax filing solutions. So we are really looking forward to this session and getting powerful insights from CA Sonu Jain on crypto tax planning and investment planning, basics of crypto tax and TDS, taxation of income from staking and airdrops, tax filing and obtaining a refund of TDS, tax benefits for long-term investors, and so on. So the floor is yours, Sonu. And yes, you can begin. Thank you so much.
Thank you so much, Harsha, and welcome to everyone who are present here. So before we begin, so today is a very important day for two very specific reasons. So one, no, definitely it is not the ITR filing due date, but just a heads up to you guys that less than 46 days are left to file your taxes. So 31st July will be the last day to file your taxes. And today being 15th of June, you have less than 1.5 months to file that. And second, why it is very important is like we are still into the midst of computing our income for the last year. But then today is also the first due date of advance tax for the current year. So today is a very important day where you will understand two different things with regard to how you will compute your income for the last year. But also at the same time, we will also touch upon advance tax and how you can compute that as well. So without much ado, I think we can begin.
Absolutely, Sonu.
Just a minute, guys. Let me share my screen. Is my screen visible, guys?
Yes.
Is it fine now?
Yes, it is.
Yes. Okay, guys. So before we begin, just a heads up on some data that has been shared by the government with regard to crypto transactions. So we can see that based on the latest information that was provided by the government in the parliament in the month of March, they estimated that almost 157.9 crore rupees has been collected as TDS till now. So this is just 1% of the total value of transactions. So effectively, Indian investors have traded for like 15,000 crore plus amount just from 1st of July 2022 till 31st of March 2023. So it is a significant volume which is being traded, and like all of you would also agree with me that if the TDS rate is reduced or the taxes are relaxed a bit, we will see this number go up by multitude. So that was some of the facts. Now we will begin with the basics of crypto taxation. So first of all, this specific tax scheme, it applies only from 1st of April 2022. So before that, whatever crypto transactions you had done will be governed by the specific laws that were applicable at that point of time. So any transaction which you did before 1st of April 2022 will be either your short-term capital gains or long-term capital gains as applicable. Whatever we will discuss here is only for all the income that you have earned from 1st of April 2022 onward. Right. So majorly there are two sections that govern the crypto tax scheme in India. So one is section 115 BBH and the other one being section 194S. Now, section 115 BBH, it very simply says that if you are a trader where you are buying and selling crypto assets, and if you make a profit out of it, whatever profit you are earning, you will have to pay 30% tax on that. So it is a very simple provision. you are a trader or you are an investor, you are buying and selling crypto assets. And if you end up generating profit out of it, you pay 30% tax on that. Now, this was fairly simple. So this is something that all of us are accustomed to. So if you're investing in shares or you're buying and selling real estate, you know the competitions are the same. But what happened is that the government went a step ahead. They also told you that I will not allow you deduction for any expense that you will incur. So for example, when I buy crypto on any Indian exchange, for example, I would pay 0.2% or 0.54% as the exchange fee. That exchange fees cannot be reduced from your profit. So that is the first point. Then second one, they also told you that if you by chance incur any loss while trading in crypto assets, they will also not allow you benefit of that trade-off. Now this is a very crucial point to understand, because like let's say you traded in BTC and you made a profit of 1000 rupees, and then you also traded Ethereum and made a loss of 500 rupees. The government says that your BTC profits of 1000 will be taxed at 30%, but your Ethereum loss of 500 is a dead loss. So you effectively cannot do anything with that loss. Now, this is a very harsh scheme for Indian investors, because so one thing is very certain, that in any financial sector industry, may it be stocks or may it be bonds or may it be crypto, for example, these are all volatile markets. So the prices don't remain the same even for a second. So prices change every single second. So it is very much possible that investors are going to incur a loss. But then this regime shows that the government is conservative towards promoting this industry, and that is why there is a harsh regime as of now. So that is a major blow to crypto investors. Just to give a few facts, I think most of you here will agree with me that in the last year, because like we had the full bear market going on and then it was all crypto winter as we call it, many investors have actually lost money. Now, when their net P&L at the end of the year is a loss, the government is still expecting them to pay taxes on the profit, which is unreasonable. But then, like, this is the law as it stands today. So just to recap, you are a trader or an investor and you're buying and selling crypto assets. If you make a profit out of it, you will pay tax at 30%. So this 30% will additionally be increased by surcharge. So surcharge is basically a tax on tax. So if you are earning more than 50 lakhs, on the tax amount, they will levy an additional percentage which starts at 10% as a surcharge. Now, apart from surcharge, you will also pay 4% health and education cess. So this 4% is standard for all of them, irrespective of whether your income crosses 50 lakhs or not, you will pay the 4% health and education cess. So that is the overview of the crypto tax scheme. Now, apart from this, we have another section 194S. Now, this basically governs the TDS aspect of all the crypto trades that happen in India. Now, with crypto, when it was introduced, the government's intention was to track all the transactions that happen. Because we are all aware that if you do any transaction on the blockchain, you cannot identify between who two individuals the transaction took place. Right. So, for example, if I were to send funds to Mudrex over blockchain, no one would know that I sent funds to Mudrex, and vice versa. Now, to track this, they introduced the TDS provisions. So where they said that if you are trading and you are selling asset, then the buyer of the asset is going to deduct 1% TDS. So wherever you as an Indian resident are going to sell your crypto asset, your TDS will be deducted at the rate of 1%. Now, the condition is that you as a seller should be an Indian resident, and the buyer can be any person. So you are trading with your relative outside India, still you are covered under the TDS, and it is your relative's responsibility to deduct the 1% TDS and remit it to the government. Now, as TDS in itself is a complicated issue, because every investor will have to file separate TDS form, because that is how it works. So to remove this difficulty, the government said that if you are going to be trading on any Indian exchange, or for that matter, any exchange, so the exchange has a flexibility to deduct TDS on the buyer's behalf and then remit it to the government. So effectively what happens, if you trade on any Indian exchange or Mudrex also for that matter, if you buy and sell assets on Mudrex, your TDS will be deducted by Mudrex. So effectively, if you are buying crypto, you do not have to deduct TDS on your seller, nor you have to go and search which form you have to file and do all that compliance. So all the Indian exchanges will do it for you. Now the issue arises is what happens if I trade on international exchanges or let's say on blockchains. Now that is something that the government is yet to come up with and clarify, because there is a practical impossibility in deducting TDS there. Now the reason for that is, let's say I am trading on any international exchange, let's say Binance. So when I'm trading on Binance in the spot market, when I go and buy as an Indian investor, the first point is I do not know who is my counterparty. So the person who is selling his assets to me, I do not know his identity. Now the second point is I do not have the power to also go and find out with whom I have traded, right? Because I am just one among crores of people who trade on Binance. So they have no legal liability to give me identity of the person with whom I have traded. So this is why TDS mechanisms fails at this point of time, and the government will come up with a clarification as to what will happen for all the trades that happen on international exchanges and blockchains. So as of now, it is a bit of a gray area. So that is for all the spots and margins and all other trades that happen on international exchanges. But there is one aspect in international exchanges where TDS is actually applicable and where you are required to deduct TDS, and that is the peer-to-peer. So if I am doing any peer-to-peer purchases on Binance or let's say any other international exchange like KoinX or MXCC, on all of these exchanges, if I am making purchases in P2P as a buyer, then I am required to deduct the 1% TDS and remit it to the government. So this is a very crucial responsibility that all of you have to be aware of. If you are purchasing in P2P outside of Indian exchanges, then it is the buyer's responsibility to deduct the TDS. Now, once you have deducted TDS, you will also have to file certain TDS forms. So there are two forms which are notified by the Income Tax Department as of now, which is Form 26Q and Form 26QE. Now, so basically the first question would arise as to which form are you going to file. So it is fairly simple. So you have to refer to your last year's ITR. So whatever purchases you are going to make in P2P in the current year, for that you are first going to refer to your last year's ITR. In that you are going to verify if you had declared any business income in that or not. So whether you are, let's say, a CA, a doctor, lawyer, or you run your own family business or any other business for that matter. It includes futures and options in securities also. So if you trade in Indian stock market, even that is considered as a business income. So if you have a business income and the turnover of that exceeds 1 crore in case of a business, which is your futures and options, or you run, let's say, a provision store, a grocery store, any business for that matter. If the turnover exceeds 1 crore, you will file Form 26Q. Now, second thing, let's say you do not have any business, but then you are a professional, like you are a doctor, lawyer, CA. In that case, if your earnings, that is the gross receipts for the year, exceeds 50 lakh, then you will file Form 26Q as well. Now, what if I do not earn more than 1 crore or I do not earn more than 50 lakhs from my business income? Or for that matter, I do not have business income at all. Then in that case, I have to file a very simple form, which is called Form 26QE. This form will be available on the income tax portal. So you log into your income tax portal, you will get Form 26QE there. You just have to enter the PAN of the buyer and the seller and then the transaction detail, and you can file it. So Form 26Q is very simple to be filed. But if you have to file Form 26Q, it is a very lengthy process. So first of all, you will have to obtain a TAN, which is the tax identification number. You obtain the TAN, you will deduct TDS on every transaction. You will remit it to the government by 7th of next month. So if I deducted in, let's say, June, the TDS, by 7th of July, I will remit it to the government. And at the end of every quarter of a year, I will have to file my TDS return. So the first quarter of the current financial year is April, May, June. So once June ends, by 15th of July, you will file your TDS return, and which will contain all the PAN of the buyers and sellers. So Form 26Q is slightly complex form where you will actually require the help of a chartered accountant. But Form 26QE is fairly simple. Now, all of this hassle will be applicable to you only if you do P2P outside of Indian exchanges. So if you are trading in Indian exchanges, whether P2P or in the normal spot markets, all the TDS compliance is taken care by the Indian exchanges. So that was about the basics of the crypto tax scene in India as on today. So moving forward, Harsha, do you is there anything from Mudrex end?
Okay, yeah, sure. Are you continuing with the presentation because your screen is not visible?
Is it visible now?
Okay. They can see the screen actually. That is cool then. Yeah, it is visible now. Okay.
Yeah, so yes. So everyone, so we covered two very important aspects. So one was the section 115 BBH, where we understood that if you are a trader or an investor and you are actively buying and selling crypto assets, you will have to pay the 30% tax on your gains. Now the question arises, what happens to other types of income where I'm actually not buying and selling assets? So for example, let's say you received any crypto assets in the form of salary, or you received any crypto assets in the form of, let's say, staking income, or you use Mudrex products and then you have lent your assets and earned some yield out of it. So what happens to that? So effectively, these types of transactions where there is only a receipt from one end without you selling anything in return, this will all be covered under the general tax provisions. So these transactions will not be applicable under section 115 BBH. Rather, they will be applicable as per the general tax provision. So effectively, in these types of transaction, you will get the benefit of the slab rates. So for example, if you received salary in crypto assets, so it will be taxed as your salary income and not as a virtual digital asset income. Or let's say you received staking income, so that is treated similar to your interest income and again taxable at your slab rates. So effectively, if I were to give an example, so let's say you traded and made 2.5 lakh profits, and then you also add some 50,000 as, let's say, staking income. Now effectively what would happen is this 50,000 will not be taxable for you since you did not cross the 2.5 lakh basic exemption limit, but the 2.5 lakh which you earned as income by trading crypto assets will be taxable at flat 30%. So that is how the tax will be computed. So whatever income you earn during the year, you simply exclude crypto assets and then you will calculate all other incomes at your normal slab rates. So I have just covered the staking part here. So whenever you receive your staking income, it will be taxable at the income tax rate. So you will not be paying 30% tax on that. You will be paying tax as per your slab rates. Now, it is also possible that today I received staking income, but I'm selling that staked income, whatever I received. Let's say I staked 1 BTC and I got 0.1 BTC as staking rewards. This 0.1 BTC, let's say I liquidated after 1 week. And during that process, the price has increased. So in that case, whatever is the gain between the date of me claiming the staking rewards and the date of my actual sale, if there is a price increase during that period, that will be taxable at 30%. So if I were to give a simple example, so let's say I staked 1 BTC, out of which I received staking rewards of 0.1 BTC as on today, 15th of June. And the value of that 0.1 BTC is let's say 1 lakh rupees. So 1 lakh rupees is taxable as your staking rewards at your slab rates. Now what happened? I held it for let's say till 20th of June. And on 20th of June, when I'm selling that 0.1 BTC, the price is 2 lakh rupees. Now what would happen is in my ITR, 1 lakh of staking income I will declare, which will be taxed at slab rates. And under the schedule VDA, I will also declare my gains from crypto assets. So this 0.1 BTC I sold for 2 lakhs. But my cost is rupees 1 lakh, which is the value on 15th of June when I actually received it. So the difference is 1 lakh, the value has appreciated by 1 lakh. So on this 1 lakh rupees, I will pay tax at 30%. So that is how the computation is going to work. When I receive it, I pay tax at slab rate and that becomes my cost. And subsequent sales, if there is a gain, I pay 30% tax only on that gain component. So this is for staking. And moving forward, we have airdrops. So airdrops is something which is common in the crypto industry. And then we have a lot of investors who have made quite a good amount of money only from airdrops. So for them, it is going to be very relevant because airdrops come with certain tax exemptions. So the very nature of airdrops is such that it is in the form of a gift. So whenever you are receiving any gift, if the value during the year is 50,000, you do not have to pay any tax on that. So if you received an airdrop, the value of which during the year is less than 50,000, then you do not pay any tax on that. So just to give an example, let's say you received the Arbitrum airdrop and you did not receive any airdrop during the year. So your income for the financial year 22-23 from airdrops is just the Arbitrum airdrop, which will be like, let's say 30,000 rupees. Now in this case, since 30,000 does not exceed 50,000 rupees threshold, you will not pay any tax on that. But it is also possible that some of you would have used multiple wallets and you would have received airdrops in multiple wallets, because of which your airdrop value is, let's say, 51,000 rupees. Now in this case, since the value of airdrop has exceeded the annual limit of 50,000, the whole 51,000 will be taxable at your income tax slab rate. So that is how for airdrops the taxation works. So if your total airdrops during the year is up to 50,000, you do not pay any tax on that. If it exceeds 50,000 by even 1 rupee, the whole amount is taxable at your slab rates. So this is when you receive the airdrops. Now, when you subsequently sell it, like let's say after 2 weeks, I sell the airdrops. Again, the same concept which we explored in staking, that if there is a price increase during that 2-week period, then that price increase will be taxed at 30%. So this is regarding airdrops, and I think most of us will be having that tax exemption of 50,000 for the airdrops that we have received. Yes, so till here we have completed like some of the most common crypto transactions that investors have and the tax obligations on those. So we covered the general tax for traders and investors, and then we also covered staking and airdrops. So now the main question arises, which also would have arisen to you when you saw the second slide, that government has collected 153 crores as TDS. So how do I get it back? So effectively TDS, so we need to understand how TDS works. So TDS is, in simple form, it is a type of advance tax. So it does not actually mean that you have paid that as taxes, but you can claim it back. Now how TDS works is that, let's say you earn 1 crore rupees as salary. Now what would happen is, each month when your employer is going to credit you that salary, he is going to deduct the tax amount from the salary, which is going to be remitted to the government. So effectively, if you are an investor who was earning salary, you would know that if you had only salary income during the year, your ITR filing is very simple, because all of the incomes are already declared and your tax is also already paid. You neither pay additional tax nor will you pay any interest on that. So this is all possible because of the concept of TDS. So for crypto investors, effectively the scenario is different, because whatever transactions on which TDS are deducted are not actually our incomes. So because I may go and sell 10 BTC on any Indian exchange, it does not mean that the 10 BTC is my income. So effectively I would have incurred some cost to acquire the BTC also. Now that is why it is very important to understand how TDS is going to impact your tax liability and how can you get a refund of that. Now, first of all, you need to calculate your income from crypto transactions. So if I were to say, let's say you had 3 lakhs of profit by trading in crypto assets. Now on 3 lakhs, you will pay tax at 30%. So which comes to approx 90,000 rupees. So we will just exclude the 4% health and education cess for now. So just on the 30%, you would pay 90,000 rupees as your taxes. But when you did all the trades during the year to earn that 3 lakh rupees, let's say 30,000 was deducted as TDS by Indian exchanges. Now, effectively, when you file your ITR, you're going to declare income from crypto assets of 3 lakhs. The tax will be computed at 30% at 90,000 rupees. From this, your TDS will be deducted. So from 90,000, which is your tax payable, 30,000 TDS will be reduced and you will have to pay just the balance 60,000 rupees to the government. Now, the reverse case is also possible. So let's say I did not earn any income throughout the year. So effectively all the trades that I took, I ended up losing them, because first I traded Luna and then I lost in it, and then I also bought FTT and even that collapsed. So effectively I've lost money in all the coins. Now because the TDS works on like every transaction, so on every sale that I made of Luna and FTT, the Indian exchanges deducted 1% TDS. Now during the year I did not earn any income, so whatever income is there is just a loss, so which is a dead loss. I cannot carry it forward to the next year. But if my TDS deducted was, let's say, 10,000 rupees of all the transactions, then I will have to file my ITR to get that refund back. So without filing ITR, I cannot claim that refund. So if you want the refund of TDS, which in this case you will get because you had loss and there is no tax payable. So effectively in your ITR, you are going to declare the loss. The tax payable is going to be 0, but then TDS is already deducted of, let's say, 10,000 rupees. So once you file the ITR, you will get the refund of rupees 10,000. So it is very crucial for crypto investors, whether you make profit or not, to file your ITR so that you at least get the refund of TDS. So this is also a very simple process, because in the current financial year, in the ITR forms, you have a separate section for crypto assets, which is called as the schedule VDA. So if you are filling the ITR by yourself or you are taking expert help, you can always verify your ITR which is filed to see whether the schedule VDA section is filed or not. Because if you don't declare your income under that, then it may be incorrect. So all the crypto assets from financial year 2020 to 23 will be declared under the schedule VDA section of the ITR. So this is regarding the tax filing and obtaining a refund of TDS. So effectively, just to add one more point, so like at KoinX, we have also built an automated platform. So like if you're using Mudrex or any exchange for that matter, you can integrate all of your trading reports and blockchain wallets into the platform, and we will give you a ready-made schedule VDA report, which your tax advisor or you yourself can like copy paste into your ITR and then like file it. So that is also relevant, because we have seen that many crypto investors say that their tax experts either do not understand crypto assets or they do not know how to compute taxes on that. So it is another challenge, because if they do not know how to do it, they might start experimenting on your ITR, which is ideally not the right thing to do. So effectively, if you give them the schedule VDA report, they will also be relaxed and they can also file it, because there is a separate section of schedule VDA and they just have to copy paste the data. So it is also very important to file your ITR correctly. So this is regarding the tax filing. And then coming to like the most asked question is that how can I save on the taxes, right? So because we know that 30% is an high rate, but the even higher impact is the set off of loss not being allowed. So effectively, currently the only tax planning that investors can do is try to do DCA into assets, hold it for long term. So that, because it is kind of a fact that down the lane, once you have regulation, once the sector is regulated, because we also know from the government that they are not against crypto assets fully. Their only concern is that currently we are not able to regulate it because of the various issues involved. But then we also know the potential of this industry. So we have seen the IT minister come out in support. We have seen the finance minister also tell that we want to promote this industry. So effectively, this shows that at least 3, 4, 5 years down the lane, we will see a much simpler, much relaxed tax regime for crypto investors in India. So just to give a comparison, so if you are trading in stocks and you like trade, you buy and sell within 12 months, it is short-term capital gains and you pay 15% tax on that. Or if you hold it for more than 12 months and you sell it after that, it is a long-term capital gains. Even there, you have the benefit that up to your first 1 lakh of LTCG is tax exempt, and only after that you end up paying just 10% taxes on the balance gains. So this is all possible because the securities market is a regulated place. So like everyone is regulated, the brokers, the exchanges, and the depositories. So this makes it possible for government to understand how these can contribute to the economy. So similarly, once the Indian exchanges start getting regulated, and then we have like laws in India coming up to protect investors, we will also find that 3, 4, 5 years down the lane, the tax regime will not be this. and then we would like remember that there was a point in time where we paid tax even when we had a loss. So like that is one aspect. So effectively, the currently what you can do is have a long-term perspective. Just DCA into crypto assets. You can use Mudrex coin sets which are there to get like diversified exposure to all the coins that are there. Or you can also do DCA on the Mudrex platform so that like you accumulate your crypto asset throughout the period without having any taxes. Because you incur taxes only when you start selling your crypto asset. So if you keep buying forever and then the price keeps increasing, you do not pay any tax on that. The only point of time you are liable to pay tax is when you sell your crypto assets. So for example, I may have 10 BTC, the value may be 1 crore. I am not charged tax on that 1 crore till I am holding that 10 BTC. But let's say tomorrow I decided to sell 10 BTC, I will have to pay tax on the gains that I made. So effectively, having regard to the current tax scenario in the country, it is better to have a long-term view and then like continue holding the asset. So, and I think that Mudrex team will also be able to present some facts on how the assets have performed over a period of time, which will also like help you to judge each coin and then like understand how it has performed over a period of time. So that is a crucial aspect to be considered. And apart from that, also just a tip for your ITR filing, if your income is going to exceed 50 lakhs, you will also need to give a declaration of all of the assets that you have, including crypto assets. So if you are earning 50 lakhs from all the sources, so crypto, non-crypto, salary income, business income, everything together, if your net income during the year is more than 50 lakh rupees, you will have to declare all of your assets. So you have a Maruti Suzuki car, you have a real estate property, and you have crypto worth, let's say 20 lakh rupees. So all of this will have to be declared in your ITR. So these are some of the tips. And then like benefits of holding with Mudrex. So as we saw, Mudrex platform is, again, the benefit that you get here is none of the TDS headaches you have to take. So neither you have to go in search of a CA to file Form 26Q or Form 26QE, because Mudrex platform handles all of the tax compliance for you from the TDS aspect. Now, second thing is you also get the diversification through coins and also the option to DCA into assets, which again, from a long-term perspective, helps you to like not only DCA into selective assets, but also get a varied exposure to the market. And third option, which is like a general expectation that 3-5 years down the lane, we will like have a very relaxed tax regime in India. So those are the benefits, and like that is it. So if you guys have any questions, feel free to drop in.
So thank you so much, Sonu. I'll just take a few moments to introduce Mudrex, and therefore we will begin with the questions. We have fairly a number of questions that people have asked. So I'll just take a brief moment in between to just showcase you guys about Mudrex and a special offer for all the attendees that we have here. So can I do it?
Yes, Harsha.
Absolutely. Thank you, Sonu. I'll just show. Let me know if my screen is audible and visible, okay? Because I'll be showing a video to you guys. Okay.
So here's the deal. People think.
Is it audible to you guys?
Yes, it's
awesome.
Audible and visible.
Awesome.
Crypto is just for trading. But the reality is, crypto trading is not everyone's cup of tea. In fact, over 97% of traders lose their money while trading in crypto. Trading is easy. Doing it right is not. Decision making, driven by FOMO in a highly volatile market that is active 24/7, is practically a recipe for disaster. So, if trading is this overwhelming, what can you do? At Mudrex, we believe long-term investing is the ideal strategy for the everyday investor like you and me. Investing in cryptocurrency requires a long-term perspective and a willingness to wait for your investment to bear significant returns. With Mudrex, you don't just invest in the present value of crypto. You invest in an asset class that is the future of finance, computing, and the internet. Since our inception, Mudrex has strived to bring investment tools to crypto that were formerly available only among traditional asset classes. We also believe that for investors to build a healthy portfolio, flexibility is a necessity. So, to fulfill this necessity, our offerings include theme-based crypto baskets that take the hassle out of picking individual funds. Let's say you're a Bitcoin maxi and would like to invest only in that. That option is on the table too. And if volatility is just not your scene and you prefer to stick to fixed returns, guess what? We've got you covered there as well. Explore the world of crypto investing with Mudrex. Download the Mudrex app now.
Awesome. So this essentially told about the 3 products that we have, and now it's the time for the special offer that we are offering to all our attendees. You just have to invest $100 and we are going to give you 1,000 rupees on it. You just have to go to the profile section and add this coupon code in the gift code to avail the offer. You can also take a screenshot, and of course we are going to send a post-event email to you guys stating the coupon code as well. So thanks so much for you guys to bring out the time and attending this session. And of course, we will be heading towards our AMA session right now. So I'll just stop my screen now. Okay, so Sonu, the flow that we are going to do here is I'll be just reading out the questions and you can just answer the questions accordingly. Does that work?
Yes, absolutely, Asha. Okay. That works. Thank you so much.
We have a bunch of questions, so of course, let's buckle up. So first of all, Pankaj asks us, do we need to pay tax on crypto to crypto trades? And if yes, then how do we calculate profit in this case? For example, if I buy BTC and sell Bitcoin and make a 10 USDT profit, but didn't convert that USDT to INR, then how do we file ITR for this? And if we use currency exchange for filing ITR, then which currency rate we will use? 1, Binance USDT INR rate, or 2, Indian Bank's USDT INR rate. Okay, there is more. If we use all this and file ITR, then what if USDT price goes to 0 or in cents, because it is not regulated by any government? And if USDT is not regulated by any government, then how can we file ITR by assuming that $10 as our profit? I think we can consider any trade profitable after converting that currency to any country's government regulated currency. Please give your take on this.
Yeah, I think it was a fairly long and a detailed question.
Yeah.
So just to answer to Pankaj, so first of all crypto to crypto trades are taxable in India. So in India, it does not matter which currency you earn or in which crypto assets you earn. If on that day there is a trading market available for that, whether in India or outside India, you will have to compute your income and pay tax on that. Now, coming to the example that he quoted, that where you buy BTC, sell BTC, and then you make a 10 USDT profit out of it. Now, the conversion is going to happen based on the USDT price in Indian exchanges. So you will not consider the Binance USDT INR price because that is a P2P market where it can be fluctuated. It is not an open market. So the tax department always prefers open market to find out the prices. So effectively, if in Indian markets at that point of time, so when you sold that BTC to realize the 10 USDT worth of profit, if let's say the price in Mudrex was 80 rupees per USDT, so effectively your gains is rupees 800, which is 10 USDT into 80 rupees. Now this is your gains which will be declared in your ITR. So with KoinX, all of this is automated. You don't have to fetch the price at that exact time. KoinX fetches it in the background by itself. Now the second concern is that what if the USDT price goes to 0 after a certain point of time? Now that is a risk that the investor is bearing. So that is what we advise to all the clients, that if you are trading in crypto assets and you are making profits, so whatever is your profit at the end of the day, you convert it to INR. So effectively, just to give a risk mitigation advice to every participant here, the first prime example when you are being in the crypto industry is not to keep your whole portfolio or the net worth on any centralized exchange. So you don't have to do that. You can, if your portfolio is significantly large, you buy a hard wallet and keep it there. Or second, you safeguard your seed phrase, educate yourself on how to not get your wallet hacked, and then use a soft wallet also. So the first important thing is not to keep your net worth on any centralized exchange, because the governments are like, as they start cracking on each and every exchange, there will be some bad players who will end up wiping your portfolio. So you do not want that to happen. So that is why you first use any other wallets other than exchanges to store your portfolio. Second, let's say you are a trader. Now, if you are a trader, you will need to estimate how much is your trading capital. So like, let's say you trade with a minimum 10,000 USD as your trading capital. Now 10,000 USD is what you will keep on the exchange for your trading, and whatever are your P&L at the end of the year, you should ideally convert it to INR and realize it. So because we do not know which, even the USDT pairs, we do not know whether they would retain their peg or not, because the USD INR rate, which is the US dollars to INR rate, is 82. But if you see the USDT INR rate, it is 92. So that there itself, you are finding the 10 rupee premium is being charged for USD in India. So effectively, this will not sustain in the long run. So either you realize profits in USDT, or for that matter, if you are holding USDT, it is possible that this premium will come down at some point of time. That is why you should not consider USDT as an asset in which you put your wealth. Rather, it is just a temporary asset which you use it for like 1 day, 2 day, you keep it there, and then you subsequently convert it to INR. So that is ideally the right thing to do. Now, to simply answer his question that what if it becomes zero, the government will not give you the benefit of that, because their logic is simple. If at that point of time, or for that matter on that day, you were able to liquidate it for any amount of currency, that is the bare minimum on which they will charge you tax. So if in Indian exchanges you were getting a price of 94 USDT on that day, you have to pay tax at 900 rupees on your 10 USDT gain. So that you cannot argue that at the end of the year USDT depegged and its value is zero. So that was your personal investment decision.
Okay, awesome. Can we move on to the next question, Sonu?
Yes, absolutely.
I hope, Pankaj, you are satisfied with Sonu's answer. Yeah. So Raviraj asks us, with this year's, so Raviraj has 3 questions. So I'll just break it down, okay? So I'll ask first question first. With this year's ITR filing, we are required to mention income from crypto. But if I have not traded and held for long term, then still do I have to mention in ITR?
Yeah. So in this particular case, Raviraj, you do not have to mention anything in the schedule VDA column of ITR, because you have not traded in crypto assets. But like I mentioned, that if your total income is crossing 50 lakhs during the year, so you do not have any trading in crypto asset, but let's say you have salary income and then you have business income, everything put together, if it exceeds 50 lakh rupees, then you will have to file the schedule. There is a schedule where you declare all your assets and liabilities. So there you will have to ideally declare your crypto assets holding as well. So that is for the first question.
Okay, thanks.
Okay. So we have his second question as well. IT guys clarified that CG can be adjusted within VDA, that is between Bitcoin or Ethereum. But Mudrex gives the coin set of 50-50 Bitcoin and Ethereum. So how will the CG adjustment come in play in this scenario?
So effectively, the point is that there is no such clarification which is issued which says that between the same coin you can do. So I think this all stems from one of the questions that was answered in Rajya Sabha way back in May 2022, where they said that we will not allow set off between 2 coins. So that is the answer that most of us have read, but none of us read the question, where the question was also, can I set off between 2 different assets? So we cannot conclude that because the answer says only between 2 assets, I can do it within the same asset, so that we cannot do. Now, so that is purely from a legal perspective. But then again, so another interpretation could be that you could take like a legal opinion and then like set off the whole thing. So either ways, there are only 2 ways of doing it. Either you follow the law and don't set off between any asset, whether same coin or different coin, or you want to take the risk and you set off the whole thing. There is no middle path that I set off in 1 coin, but I do not set off between 2 coins. So that concept is not there.
Okay.
Raviraj, do you have a follow-up question?
No, not really. Sonu did say this looks like gray area, because I'm confident I read this somewhere. I can share the clipping later.
Okay.
Sure, Raviraj.
Yeah.
Please, you could get in touch offline and share it, and we could have a discussion there.
Yeah, thanks.
All right. So third question is for us. When is the UPI functionality being launched? So we have Mayank to answer this question.
Hey, hi folks. So we are currently internally testing UPI for our app. I already have access to it, and we actually look forward to sharing it with you folks. The expectations right now is that we should be able to release it within this week for a large chunk of our users. So yeah, keep yourselves ready, and also do try out the offer that we've sort of set up for everyone.
Thanks, man.
Oh, awesome. So moving on to the next question. It's for you, Sonu. And Aditya asks, many people saying that we can set off loss if there is same pair. So is this correct?
No, Arsha. So like I mentioned previously, so setting off within one coin and not setting off between two different coins, that concept is currently not there. So the section also does not make any reference to two different coins when it says that no set off is allowed. So purely from a legal perspective, it is not allowed as of now.
Okay, awesome. So Ankit asks, hi Sonu, do we need to deduct TDS on staking rewards and airdrops? Staking rewards and airdrops were on wallets such as MetaMask and Taxation.
No, Ankit. So there is no TDS on staking rewards airdrops.
Okay. In the first, we are going to complete the questions given on the chat, and then we can begin classes. So Dinesh asks, is TDS applicable on purchase of crypto also?
No, the TDS will be deducted by the buyer, but when you are purchasing crypto assets, there is no TDS. So when you sell it, so let's say I sold 100 rupees worth of crypto assets, so I will receive 99 rupees in my bank account, and 1 rupee will be deposited as TDS with the government. But when I'm purchasing, I purchase for the full rupee 100. There is no TDS on that.
Okay, thank you.
Okay. So we do have certified team to, they are asking, I receive a staking reward of 0.1 Ethereum on April 1. I don't convert it into INR for the entire financial year. How do I calculate the value of this staking reward? On what date do I take the value of this staking reward of 0.1 Ethereum to pay taxes according to the slab rate?
Yes, so they will have to convert it at the price which was applicable on April 1st at the time when they received. So let's say if it was received on 15th of June, for the purpose of example, if I received 0.1 Ethereum on 15th of June at approximately 8 p.m. and the price in Indian exchange is let's say 3 lakh rupees per Ethereum. So 0.1 Ethereum will be 30,000 rupees. So that will be the income which will be chargeable at your slab rates.
Okay. Next question we have from Nirmal. He asks, does holding digital assets in a hardware wallet make you liable for declaration or taxation during ITR?
Yeah, Nirmal. So effectively, just by holding crypto assets, you do not incur any tax liability. So, but if you sold your assets, so that will have to be declared in your ITR under Schedule VDA. And if you are just holding it, but then your income exceeds 50 lakh rupees, then you will have to declare the value of the crypto assets that you hold in your ITR. So those will be the only two compliances.
So we have another question from Mir. I hold all my digital assets in Binance since long back after India introduced its crypto tax. I didn't have any transaction on my wallet. Okay. Do you want to complete your question, Mir? If you're here, you can just unmute yourself and speak.
I think he has made a follow-up as well. So his question is, am I liable for declaration of assets? Yes, Somir. So like I mentioned, if your total income during there is going to exceed 50 lakhs, then you will have to declare the value of the crypto assets.
Next question is for us, Mayank. Can we transfer our assets from Mudrex platform to our cold wallet?
Yes, you can. We currently allow USDT transfers. So you will have to convert your assets to USDT before you transfer it. But we support all networks that exist under the sky, and you should be able to take out your USDT as and when you want.
Okay, thank you.
We have another question from Nirmal. If my referral crypto income exceeds 50,000, am I liable for paying tax? Value at the time of earning was higher, but the current value is less than rupees 50,000. Should I pay for the value of referral crypto assets at the time of earning them?
Yes, Nirmal. So effectively, your value that you received when you earned the referral income will be the one that will be taxed. So effectively, whatever the referral income you earned will be taxable at your slab rate based on the value when you received it. But then again, you will also get the benefit of slab rate. So if this is the only income that you have, then it will not be taxable because it is below the limit of 2.5 lakh.
Okay. Ankit has a follow-up question, and he asks, if I converted my airdrops, say ENS tokens into USDT on MetaMask, how to deduct TDS on that?
So effectively, any transactions that are happening on the blockchain, so currently you cannot deduct TDS for that because you do not know the identity of the person with whom you are interacting. But let's say, for example, if the transaction is happening between two friends who know the identity of each other, then they can comply with TDS on their own. But if not, if you are like, let's say, swapping on a DEX or you are like swapping through any router system on the blockchain, effectively you will not be able to deduct TDS, and that is currently like it cannot be applied there as well.
So Mir also has a follow-up question on the previous question he asked, and one second. Yeah, which was about am I liable for declaration of my assets? One. So he asks, to which the answer you gave, but I have put my assets into Binance Vault. Does returns from that to be considered for ITR filing?
Yes, effectively. So whenever Binance is going to settle those vault transactions, so whenever the vault matures and then you receive the funds into your account, the value at that point of time will be what will be considered as income for your ITR.
Okay.
So on settlement, you will like effectively pay tax.
Nirmal again has a follow-up question. So he asks, his referral income credited to him as crypto, not as INR.
Yes, effectively. So that will have to be converted to like INR based on the exchange rate in the Indian exchanges, and subsequently it will have to be declared in the tax return.
Okay, thank you. Inder, you can ask your question.
Thank you so much. First of all, thank you so much, Sonu. It was an amazing, enlightening session. Pardon me, I actually got a call, so I was off the meeting, so I don't know whether this question has been asked or not. My question is regarding those people whose funds are stuck in vault, like what to do about it. Say suppose if you got 8-10 lakhs stuck in it and they are still in the restructuring process, how to go about it?
So effectively, this is a bit complicated manner where like, because this is not something which is specific to crypto industry, but it is a generally well accepted fact that companies go under liquidation. So like how you have assets of 8 to 10 lakhs on Vault platform, it is also possible that when GoAir filed for its bankruptcy, many people who had funds there, they also have it locked up. So the law says that this is not yet treated as your sale of assets. So the liquidation process will get over, and then you will realize that let's say your assets has reduced from 8 lakhs to let's say 3 lakhs because of the restructuring. So your effective portfolio will now be 3 lakhs, but you will not incur any capital gains on that because effectively you lost most of it. So this is not a loss, but it is lost, LOST. So this is lost due to various transactions. So this is not barred by the limitation of 115 BBH, which says that loss cannot be offset, but these are lost assets. So effectively, you did not lose it, but you still lost it. So that will be reduced from your gains, and you can show the net amount in your ITR. But all of this is going to happen only once the restructuring is completed and then the court gives its judgment. So until then, you will not be declaring this as your assets because these are currently held by the liquidator.
So we won't declare them as our assets, is what you mentioned, right?
Yes, you will not be declaring it as part of your net worth because you still do not know whether those 8 lakhs, it can increase also, it can decrease also.
Thank you so much, Sonu. Thank you.
Okay, so we have a couple more of questions, and Aditya asks, if I do testnet task on Galaxy or Galaxy or any site, but they send airdrop NFT on main net Galaxy does not Polygon. Generally, it does not have any value, but some NFT have value and being traded on OpenSea. Do we need to pay tax on NFT, or if I do not sell?
So for NFTs, the process is a bit complicated because each NFT is unique. So when we have Bitcoin, I can hold one Bitcoin, I can sell it on Mudrex Binance. It simply does not matter. Everywhere I will get the similar price. But with NFTs, the price fluctuates significantly. So what are the characteristics of the NFT? How is it unique? So that is why when you receive an NFT, if you sell it, only at that point of time can you compute the gains for that. Because these are non-fungible. So one NFT cannot replace another NFT. So for Bored Apes, there is a floor price, but that floor price cannot become your income for the matter that your NFT may be more valuable or less valuable than the floor price. So for NFTs, the concept is very different. So only when you sell it, you can declare it under taxes.
Thank you, sir.
So we have another question from Mir, and this question is for us. I want to know more about your vault, and that was mentioned in the video. Yeah, and how does Indian platform work under Indian laws?
How does Indian? All right, Mir. So it's a two-part question. The first part is about Mudrex vault. Mudrex vault is a fixed interest bearing product on Mudrex. It gives a 10% interest right now. Currently, the way that yield is generated is we deploy the funds that are allocated there into 7 to 9 different strategies based on market conditions. All of these strategies are actually run by or built by our internal quant team, which also that team is also the team which is responsible for Mudrex Capital, which is our hedge fund. If you and the second part of your question was around how does the Indian platform work under the Indian laws. So essentially we follow all Indian laws today that exist today, and I am not sure if you have any follow-up on this part. So if you do, please, if you can unmute yourself and slightly clarify this question, I could answer better. Mir? All right. Vaibhav has a question. Vaibhav, would you want to speak?
Yeah. So Sonu, I know you've covered this one, but I'd just like some clarification because I'm still not clear on this. So let's say I'm only trading in Ethereum, right? So I sell my Ethereum in July and I make a profit of 10K, right? And then I again sell Ethereum in August and I lose 5K. What is my tax for the entire financial year? These are the only 2 trades I did in the entire year.
So effectively, purely from the section point of view, you will pay tax only on the gains of 10,000 rupees. So that benefit of set off of loss is not allowed. So although your net profit is 5,000, but then the tax liability will still be computed on 10,000 rupees. So this also if you read it in conjunction with the ITR forms that are issued, so they nowhere ask you to name the coin in which you made a profit. So they simply tell you tell us the date of purchase, the date of sale, and the sale and the buy value, and we will compute the gains. So nowhere in the ITR form they ask you from which coin did you make a profit. So that is the whole intention of the law as of today.
Okay, got it. Thank you.
Perfect. The next question again is for Mudrex from Certified team. So the question is, if Mudrex is moving crypto around various wallets on behalf of the user, is Mudrex deducting 1% of the TDS for each time it's moved around? So Certified team, a lot of these transactions happen on happen on chain on DeFi. As Sonu also mentioned earlier, a lot of times we do not know which two entities exist here, so we do not deduct TDS here based on the laws that exist today. This applies for the world product, yes.
They will be receiving the recording.
Yes. The next is from Inder. Will you folks be receiving the recording? You folks will definitely be receiving the recording. You folks will also receive a feedback form. It helps us a lot if you please find time and fill it. We want to improve this every time we do this for all of our users and KoinX users together.
Okay, Aditya asks, what is Mudrex? Is it mutual fund of crypto?
Let's call it an index fund. I've been asked not to call it a mutual fund, but it is the closest to mutual funds in cryptocurrencies you can come to in all the products that exist today in the Indian market.
Okay, we would also be taxed on CoinSets for buying and selling.
We would also be taxed on CoinSets for buying and selling. Yes, of course.
I guess that's all for today. So we have, okay.
One more.
Okay.
I mean, this is an amazing audience, folks. Thank you so much for asking these questions. These questions make us really happy. I'll just come to Meer's question. He has a follow-up around. Thank you, Sonu and Harsha, for answers and insights. Sorry, couldn't come on mic due to my laptop. Like it was said, there is need to file Form 26Q. So what really is the difference we can expect in the Indian platform?
Yes, Sonu can answer.
Sonu, I think this is the one for you.
Yes, I think Meer, I think the question is what difference can we expect on Indian platform? So like I mentioned, you have to file Form 26Q or 26QE as applicable when you are purchasing crypto asset outside of the Indian exchanges. So Income Tax Department has issued a circular which says that any crypto exchange can deduct TDS on the buyer's behalf. So effectively only Indian exchanges are complying with that. Now, when the exchange complies with it, you do not have to file that 26Q or 26QE form separately. So irrespective of whether your business income exceeds 1 crore or not, you do not have to worry about TDS. You just focus on the trading activities. But however, if you venture out to international exchanges and start doing P2P there, then for those transactions, you will have to file Form 26Q or QE.
Makes sense. So I think, thank you, Sonu, Sir, and Harsha, and everyone. Yes, Nirmal, you are going to get a recording. You are going to get the recording in the post-event email that we are going to send after the session ends. Any further question, or we are good to go?
Is there any follow-up session? Meer, we keep on posting sessions. You can find more about them on the Mudrex app. You can also find about them on KoinX's social media pages and Mudrex's social media pages. We also host sessions about investing in cryptocurrencies. We bring in leaders from different spaces in cryptocurrency world. So founders from NFT metaverse space, and so on and so forth, including like venture capitalists, hedge fund managers. You should definitely, if you are interested in this side of the world, should definitely keep a tab on our app and our social media pages for more sessions like these. One last question from Aditya. I think it is for Sonu. The question is, if I bridge Ethereum on layer 2 or received the Solana token from Solana on Solana, is it taxable? Please, one last question. For sure, Adi.
Yes. Effectively, these are non-taxable transactions because effectively you are just transferring funds from one chain to another chain. So it is a non-taxable event. But the one condition where it might vary is, let's say, when you bridged it, the asset changed. So from so it was BTC, but when you changed it from one chain to another, it became WBTC. So then it is a sale of an asset. But if you are transferring Ethereum from one chain and you receive the same Ethereum on another, it is not a taxable transaction.
Awesome. Perfect. All
Perfect.
right. Thank you.
So I guess we are done with the questions. Sonu, do you have something to add from KoinX side?
Yes, I mean, so like I mentioned earlier, so investors now need to be very careful when you declare your ITR, your tax returns, and then declare your crypto transactions, because there are two things that are happening. One is, for all the Indian exchanges, the data is already there with the Indian government. So that is the bare minimum that they are going to check. And second thing is that I'm not sure if any of you are aware, but last week there is an international organization called OECD, which is a group of countries which have come together to fight tax evasion. So that is their whole objective. That is the whole objective why OECD exists. So it solves various issues, but among that, for crypto assets also, they have brought a framework where countries can exchange information with each other. So Binance may be based out of, let's say, any XYZ country. That country has to obtain data from Binance on the request of Indian government or any other government for that matter. So that is the whole point of that body, and they have issued the standards already. So in due course, all countries will start complying with that, and then because everyone has done KYC on most of the exchanges, so those transactions will also be with the Indian government. So it is better to pay tax now than to pay later on with penalties, because that is only going to amplify the amount of taxes that you will pay.
Awesome session. Mayank, do you have something to add here?
Yeah, of course. Awesome. So thank you so much, folks, for joining. We do this every time to help everyone in the industry, in the space. Both KoinX and Mudrex are two really good companies that you should associate yourselves with. I personally use KoinX to comply myself with my crypto taxation needs. And of course, I work at Mudrex, so I would want to endorse it here as well. Trust me, guys, it is one of the smartest ways to invest in crypto. You genuinely do not need to go out and be a degenerate trader. All you need to do is you need to invest diligently with discipline. Do not forget the basics. Do try our app. We also have a special offer for you that we had mentioned previously. Do go on the Mudrex app, try the coupon code KoinX1000, and also, when you go on KoinX, try out our promo code, get a discount on your crypto taxation, definitely comply. Thank you so much for joining. We really appreciate you taking time.
Thank
you so much, everyone. Thank you guys for hosting a wonderful session.
Thank you, Sonu.
Bye.
Bye-bye.
Bye, guys.